All right, back in the action here, guys and gals. Time to get back to work here tonight. We got to get you ready for tomorrow's trading session. And of course, as always, Tuesday evening, November 26, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it is great to have you with me tonight because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job tonight is to help you guys and gals find the best levels of support and resistance for tomorrow, the best entry and exit setups for tomorrow, and how can I forget, most importantly, how to avoid those common traps to keep growing your account in tomorrow. That's Wednesday's trading session. And we got a bunch to cover in tonight's video. First of all, we'll check the calendar. Got a big day tomorrow, last day of the week ahead of that Thanksgiving Day holiday. I want to make sure you know how to navigate around those news reports that are all piled on tomorrow morning. Then we'll grab some charts. We get some oil, S&P, NASDAQ, and I'll wrap up tonight on that mighty yellow metal, the gold futures. But I'm going to start off tonight, though, first with the oil futures. The black gold, the Texas tea. Oil went up and then sideways. Range-bound market on crude oil. This is a nice wide range on oil. You know me. I love some range-bound markets. So let's dive into that oil chart tonight. Let's kick this thing off here with a nice juicy trading range here on the crude oil. It's one of those ranges. This range has not missed any meals lately, right? Nice and wide, nice and juicy range here. And of course, you can see a bull bias, right? There definitely is an overall bullish bias to this market. But in all reality, you can pretty see lower highs, higher lows, moving average flattens out on this. It's a range. Anytime I have a range-bound market, I always know the market's balanced, and I know I want to buy low, sell high, and avoid the middle. So it's pretty easy here, right? Stay out of the middle, stay away from that no trade zone, and I want to buy it as it's going lower. I want to sell it as it's going higher. Now, you might be wondering, what's the difference between buying and selling on this market? I mean, isn't there a bull bias to it? There absolutely is. So I can be a lot more aggressive being a buyer underneath that range. But if I want to be a seller above the high, I've got to look for a couple very specific entry patterns to do that. And so tonight on the video, I want to cover all directions, really. I want to talk about a couple key patterns to buy off that low, my favorite reversal pattern to sell off that high. And then who knows? We get some big news tomorrow. Maybe tomorrow is a breakout, right? We'll talk about how to qualify a breakout because I got some big levels both above and below that you got to be aware of before you go trading breakouts on the crude oil. If you love trading oil as much as I do, you definitely want to stay tuned for more here on the oil chart tonight on the video. About some S&P. Boy, the S&P, good little bit of an ugly one today. It wasn't the prettiest of sessions today for the S&P. I think that big blast higher in the overnight Asian session kind of messed everything up a little bit here, didn't it? But you know, the bottom line is, if you kind of see between all the chop here, we went big strong move up, and what usually happens when we see a big strong move up? We see a pullback, a failure, and a retest of that high. So even though it wasn't the prettiest thing in the world, they are really close to finishing off their objective. You know, anytime a market goes up with this much strength, we look for that deep pullback and a retest of the high. Now that right there is really the most important information that we have on the S&P, because at this point, there's a big question mark up here. You know, are we going to keep going through that high with what I call acceptance, or will we get kicked back off of that high? That really is the big question right now. And so tonight, what I'll do is, there's really two basic scenarios. Do we get kicked back off the high, or do we keep going, right? Do we keep going through the high? We'll put the plan together tonight for that. Or do we get what I think will happen and get a kickback? And if we get that kickback, I will talk about a couple key patterns to buy on the way on the pullback. Or what if this thing finally goes back to fill that gap? How do you know when it's ready to trade short? How do you sell it? We'll talk about all those details on the S&P. But one thing's for sure right now, you do not want to be a buyer on the E-mini S&P right now. A little bit too late to that party, and we'll talk about the next wave of buying here tonight on the video. Now, over on the NASDAQ, at first glance, it looks very similar to the S&P, doesn't it? Right? We had that big, huge, sore thumb breakout, and then of course came all the way back down again. But look at the big difference though here. We got the big move up, we got the failure as we pulled back, but where are we? No, we're nowhere near. We're nowhere near retesting that high right now. And that is probably the biggest clue that we have on this chart. Yeah, it's easy to see that big round number sitting right there at 8,400. But when I look at this chart, the first thing I think of is we're right in the middle. And when a day goes up and goes down and goes up and goes down and ends right in the middle, what does that usually happen? It usually means it's a range. It usually means it's a range. What does a range tell us? Buy low, sell high, avoid the middle. And of course, tonight, on the video tonight, what we'll do is we'll talk about how to buy low. We'll talk about how to sell high. And of course, we'll also talk about if this thing keeps ripping higher tomorrow as well. We'll dive into those details also as well. So we'll definitely get prepped up for a possible reversal. That could easily come tomorrow. And I'll make sure you guys are covered, no matter it's up, down, or sideways. Last but not least here, over on the gold, the yellow metal. Now, we know we're bearish here on gold, but there's one big problem I have right now, and that is that real strong move. What I see right now on gold is I see a bear bias to the market, but I think we've started to go sideways here right now with a trading range. This is a sneaky one. You really had to have your kind of sixth sense, if you will, really tuned in on this one to pick up on this range. But you notice though, once you find the range, you can easily see they're buying in the buy zone. They're trying to sell in the sell zone. And that reminds me, right? Do I really feel comfortable selling this range? Because, after all, it's a bear market. It's a range. So isn't the plan pretty simple? Buy low, sell high. It is pretty simple, right? It's a pretty simple plan. But there's one big variable here that I really don't like, and that is look at how strong that move came off of that low. Honestly, between you, me, and the rest of YouTube, it feels like this market wants to keep going back up to retest those highs here. It does. And at this point now, before I try to sell this market, I've got one very specific pattern I've got to wait for. I like the idea of selling up here, but I don't like the idea of selling into this much bullish momentum. So tonight on the video, I'm going to talk about how I want to sell this market. There's one very specific pattern I'm looking for on this, how we'll buy it, because I'd love to be a buyer off of that low, especially since you've got that 46.2 down there. And obviously too, we'll talk about, right, how to be, how to get that price jumping higher. How do we trade that breakout? How do we trade that reversal? So we'll talk about being a seller, obviously being a buyer, and we'll really make sure you guys have a good plan here for gold trading tomorrow. So as you can see, we got everything ready to go. Gold's ready, NASDAQ's here, I got the S&P, and of course, right, that big juicy range on the crude oil. Before we jump into the video tonight though, I just want to make sure to remind you to join our mailing list. You may not be aware of this, but right before I publish our video on our blog every evening, I send out an email to everybody on our mailing list. I want to make sure you get that email. That way you know right every evening when this video goes live. And getting on the list is very, very easy. Go right over here to the blog at sidewaysmarkets.com. I'll put all the links, by the way, in the description of this YouTube video. All I need is your name, your email address. Hit that subscribe now button, right? And then don't forget, check your email, because I'm going to send you a welcome email. Inside that welcome email has a bunch of great free resources, as well as a verification link for you to verify that you got that email from me. So make sure you join the mailing list, your first name, your email address, hit that subscribe button, and then don't forget to check your email inbox, because I'm going to send you that welcome email. And a heads up, sometimes that welcome email gets stuck in your spam filter. So if you don't see it in your inbox, check the spam folder. And then don't forget, if you guys have any questions about anything we talk about here tonight on this video, drop those questions in the comment section below. Or maybe you've got some feedback for me. Maybe you can think of a way to make this video better. I'd always love to hear your constructive criticism. What do you love about the newsletter and want me to do more of? What do you hate about this video, right? Tell me. I want to know. I want to make it better, right? So give me some feedback down in the comment section. But most importantly, if you have any questions about the strategy, the technology, the mindset, or anything we talk about tonight on this video, drop those questions in the comment section below. And you know what? Speaking of which, while you're down there in the comment section, do me a huge favor, will you? If you tune in every evening to this video newsletter, if you use it as a reliable tool for your trading, hit that thumbs up button for me, will you? Because I'll tell you, every time you guys hit that thumbs up button, not only does it get me all pumped up to keep working hard for you guys, but it helps me to expose this video to other traders who could really use a great trading strategy. So guys, help me get this video out there. Help me share the love out here in YouTube land, right? Keep me going over the break, right? Give me a couple thumbs up there. Subscribe to our channel if you haven't done so already. Oh, and one more thing too. Don't forget, sometimes I know the comment section may not be a good fit for your question. So if you have any detailed questions that maybe you don't want to put right in the comment section, or maybe you just want to figure out or learn more about our free trading classes or a free pass to our trade room or any of our course levels, call that toll-free phone number in the upper right-hand corner. Even when I'm out of the office, it forwards to my cell phone. We're always here to answer that call. So if you have any questions about getting started as a new client, joining our trade room on a free pass, or anything we talk about tonight, please don't be afraid to call that toll-free phone number. I'm really excited to talk to you here in our corporate headquarters in Los Angeles. But in the meantime, though, let's get this party rolling here. You guys didn't come to chit-chat, right? Let's get these charts all prepped up. Before we jump into the charts, though, I just want to make sure we cover tomorrow's calendar, because tomorrow is a big day. Tomorrow is, as you can see, this big wide open space on Thursday. We don't see this very often, do we? Markets aren't closed on a Thursday and then whoop, reopen again on Friday. This is the only time of the year besides, well, Thanksgiving and Christmas, right, that we really get this type of market closing, which really shakes things up. You can see that typical things we would get on Thursday, like GDP and jobless claims, are going to get crammed into Wednesday. So tomorrow is going to be a busy, busy day. As you can see here, we've got some durable goods, GDP, jobless claims. Those are all coming out right at 8:30. Then we've got the personal income and the outlays at 10 o'clock. And wait, oh, there's more. There's the petroleum status report, the inventory report, later on at 10:30 Eastern time. This is going to be a little bit, remember that old arcade game, Whack-A-Mole? It's going to be a bit like that, where we've got to kind of wait for the news to come out. We don't want to trade the news. I'm not going to trade during those news events tomorrow. What I will do, though, is I'll wait for the news to come out. I'll wait and see how the market reacts, and I'll adjust my charts, adjust my strategy accordingly. Whenever I have a day like this, I always make sure to remind my clients, don't overthink this too much. There's really only 4 things we need for a winning trade. We need momentum. We need some sort of entry pattern. We need the proper entry signal. And that signal needs to make sense with what we call market context, right? It needs to make sense for the market that we're trading. Range-bound markets, trending markets, they have different context. So tomorrow, we're going to get hit from all angles. And on top of that, there will be a sense of urgency tomorrow, because tomorrow is really, for a lot of traders, I'm sure there's a lot of traders who work at some of those big trade shops where they've got to perform tomorrow, or else they're going to drag their sorry asses back in on Friday. Right? I can almost guarantee you that in most of the bigger trading firms, if you don't get your job done tomorrow, if you don't hit your number tomorrow, you're coming back, right? You're dragging yourself back in on Friday. No football, no hanging out, right? No tryptophan coma on Friday. You're going back to work on Friday if you don't do your job on Wednesday. Now, of course, that means tomorrow, again, we're going to probably see quite a busy day tomorrow. Hopefully, the only variable for tomorrow would be the fact that it's going to be a little bit of a short day, because a lot of folks are heading out to catch a flight to grandma's house. A lot of folks are hitting the highways, right, to drive out to the kids, whatever it is. But tomorrow will all be jam-packed into that first half of the session. So my number one priority tomorrow is trade around these news events. I'm not trading these blocks of news events. I'm going to watch them come out at 8:30, at 10 o'clock, and 10:30. Give it a few minutes. Let the news come and go. Wait to see what the market does. Does it go range bound? Does it go trending? And then we'll update our charts. And again, the most important thing that I will keep telling my clients tomorrow is don't overthink this. Look for momentum. Find a good pattern, wait for the signal, and make sure it agrees with market context. And don't forget, tomorrow morning and every morning, Monday through Friday, except of course this Thursday and Friday, we're going to do it together every morning at 8 o'clock Eastern time. So don't delay, right? Come out and get registered. Come join me as a member, and we'll do it together tomorrow. We'll battle through the whack-a-mole together tomorrow. It's going to be a great day tomorrow. We usually always have a good Wednesday ahead of that Thanksgiving holiday, just because of that sense of urgency. But tomorrow, early in, early out, afternoon session tomorrow is going to be really, really dicey, I would imagine. And we'll talk more about that tomorrow morning in our trade room. In the meantime, let's get this party rolling here. I got some charts here for us. Crude, S&P, NASDAQ, and gold. Let's take a look first here at the oil. Now, oil is a bullish market into a trading range. Okay, bull markets into a range tell me I want to buy underneath that range. I want to buy underneath that range. That's the most important thing to remember when you have a bull market going into a range. Now, I can sell above the high of that range, but because that momentum is so strong, right? Because momentum is bullish, I have to use a slightly different pattern. That's kind of the real most important thing to keep in mind for tomorrow. You'll notice what I've done. I've taken that trading range and I've used that range for my buy zones below and my sell zones above. Okay, what I can also do is use, for example, like a measured move. Take that leg, bring that leg down. That gives me support down there as well. So now you know where that level is. And then there's one more thing I always like to do. I always like to, anytime I have a triangle like this, I like to take these trend lines, right, and bring them down, underneath like that to create almost like a hidden channel down there. You know what I mean? Right there, right? Take that one from there, take the one coming up off the low and pop that one in, right, up overhead. What that does is it kind of gets rid of, right, get rid of those, and it creates kind of like these expanding triangles. And I've already talked about this many times this week already, but how much I love these expanding triangles. Now, let's talk about the range, because as I mentioned in the beginning, the range hasn't missed any meals, right? It's a nice well-fed range, as I always joke around in our trade room. The big wide ranges. Now, why do I point that out? Why is a wide range? It's not more difficult, but what you have to understand is that when a market has a wide range, that momentum tends to really build as it goes. So for example, I would normally look to buy low, sell high, but oftentimes that momentum gets going so strong that it overshoots the battle zone, and then I've got to be careful to buy it back up. So you want to be aware that oftentimes on wide ranges, it would be nice if it just kind of bounced around back and forth. But a lot of times what happens is it'll run through that low because that momentum can build, right? It's not like a narrow range. If you get a real narrow range here, a narrow range, there's no momentum, right? But if it's a much wider range, then that wider range, momentum really builds, right? Momentum builds in both sides. So what happens is that oftentimes, because these big, strong moves down, I want to buy it. But instead of just blindly buying it, I want to look for a very specific entry pattern, which I call a nested failure pattern. If I have that big move down, I want to buy it back up, but I've got to wait now for those sellers to try once, try twice, and then back up. That's the big clue. That's the big clue. We know we're bullish. There's no doubt about that. I want to be a buyer. But if we collapse all the way back down here, again, I got some levels I'm watching down here. What I'm going to want to make sure I get here, though, is I'm going to want to make sure if it collapses all the way down, I'm going to want to use that nested failure pattern, right? That one, that two, and then buy it up from there. It's a failure, but it's got to be a little bit more conservative because that momentum will be so strong. That's the big clue in a wide range. Momentum will oftentimes kick in, right? And you're going to be careful with it. So we're going to get my trend line coming down, right? I got my buy zone down here. I know where the area is. Let's get down into that area, get that moving average coming over. It's a range, so buyers will be trying to buy it back up, but I'm going to let them try once, let them try twice. Once I see those bears trying twice here, once I see them trying twice, then I know where their stops are, and I'm buying it right back up into that trading range. Now, how do we sell off the high? Selling off the high is it's even more difficult because we're bullish, right? This bull market really makes it difficult to sell anything really with any reliability. So here's what I'm looking for. This one very specific pattern that I like to use whenever I'm going against the trend, and that is what I call a crown reversal pattern. We want to go up. I want to see buyers try to buy the pullback. I want to see a lower low in price followed by a trap high. And this is, as you can see, it's very similar to that nested failure pattern I just talked about, but this one has a trap to it. And that trap is what you really need to see when you're trying to go against the trend. Again, I call this a crown reversal pattern. And again, just kind of recap here, it's a nested failure, 1, 2 off the low. No need for a trap low on that one, right? Or we go higher, it's a 1, it's a 2. I do want that trap high to be a seller off that high. Again, it's a counter trend trade to sell off that high. Okay, so now we know how to buy low, how to sell high. The hardest part is always staying out of the middle. With those wide ranges, that's always a tricky part, staying out of that middle. Let's talk breakouts. Let's talk breakouts right now. What's a breakout look like? Well, before you go looking for a breakout, you got to know where you're at. Let's look left. Got that big area of resistance right overhead. So we got to be very, very careful being a buyer as we go higher. If we can go lower, though, the party has plenty of room to grow if we go lower. Look at how much we have to work with going back down to that let's say $55 a barrel, right? So you can see there's a lot more downside available right now than there is for the buy side. So what we need to see is we've got to clear through that 74. You know, I could easily see this tomorrow. I could easily see us, mid-morning tomorrow. We go up, we get 1 try, we get 2 try, and a big old crown reversal back off of that high. You can already smell that a mile away up here because you've got all of that resistance waiting in overhead. Just when you think it's safe to trade a breakout through that high, you're running right into another level of resistance. So what I want to see is, I want to see what I call a 1, 2, 3 breakout, which means a 1 strong move up, 2 a pullback to the moving average, and then 3, I want to see a very strong move through that high. That way I have confidence till we can now buy the next pullback. I'll mark up the high, those 2 highs here. I'm going to draw off that low, find that hidden channel, and look to buy off that low. So make no mistake about this. We've got to push real strong up through that 74. And really what I want to see is I want that 1 strong move, 2 pullback to the moving average, 3 strong, big strong move jumping up above that 74, and really ideally I'd like to make sure that moving average clears above 74 as well. So when I get that pullback, I've got everything clearing above that prior high. That's really going to be important, because if we see this thing, right, try to run up, it pulls back, it's gonna get messy up there. Which reminds me, like we saw today, we may see something like that. We may see it jump up, unable to get through it, and we may end up transitioning into a range up above us. That happens all the time, and we'll definitely be keeping an eye on that, right, for tomorrow. Obviously, we'll have to wait and see if we get a range. If we do see it get kind of stuck up here, Okay, now we know it's a new bull range. What's the best way to trade a bull range? Buy underneath it. 1 try for the bears, 2 try for the bears, right? A seller failure pattern to buy underneath that low. Very similar, we're looking for down here. But again, because the range is wide right now, we need that nested failure. So if we do run higher here and we sit going sideways at those highs, keep your eyes open for that failure underneath. And then last but not least is the bear breakout, right? Bear breakout's pretty easy. We got to get underneath that range, get that moving average coming down. Show me you mean it and sell off that moving average. Remember, a lot of times it'll make a strong run down. They'll try to sell it. And it'll come right back up into that range. That's exactly what we're looking for here to be a buyer tomorrow. So don't get too aggressive on this, trying to sell this pullback. Wait for that pullback to confirm, then mark that low, mark that high. That creates your new channel, and now we're looking right for sells off the high of that channel. And again, we have a lot of open space waiting below us, which is very attractive here if we can get that reversal. It's a big if right now, though. Right now, it does feel like this market wants to get up to that 74, right? Will it get up, hold the pullback, and go for a continuation? Or do we get up, 1, 2, trap, and back in? Or do we get up and start going sideways up here, right? Find a new range and buying underneath that range with that failure pattern, right? All of these are very, very viable options here for tomorrow. We just got to wait and see what we actually get. Now, wide ranges. We talked about nested failures and we talked about crown reversal patterns. Here's what I want to do. I want to give you a lot more examples of those patterns, and they're covered in our free trading course. In the upper right-hand corner, I'm going to put a link that'll pop up here for you. Grab that link and get registered for our free trading classes. The free course is great because you'll learn the entire 3-step strategy, my 4 favorite entry setups. You'll see hundreds of examples of how we use things like crown reversals and nested failure patterns on our favorite futures markets. So make sure you grab that link in the upper right-hand corner and get registered. And don't forget, if you're on the blog right now at Sideways Markets, you can always grab that big red button waiting for you below the video tonight if you're on the trading blog. So oil, you're looking good here. Remember, tomorrow, big news tomorrow at 10:30 to be trading around that news tomorrow in our trade room. Let's grab some S&P. Like I mentioned on the beginning in the introduction here tonight, the S&P had that big run up. They pulled back. The bears tried and failed, and now we're running back up to retest the high. Always very important to remember, momentum is bullish. We got the failure pattern, but where are we? We're right up around that high right now. Probably not a good place to be buying. Definitely not a good place to be buying. This is where a lot of buyers undoubtedly will be taking their profit. Now, at this point, like I mentioned in the introduction, we pretty much have everything we need. We've got that strong move up. We know the buyers want to get back to retest the high, so we know we're right there. At this point, my biggest question is, do we keep going through it with a 1, 2, 3 breakout, or do we go sideways up here? Stick around the highs, go sideways, or do we get kicked back? And that kickback is really what I'm hoping for, because I would imagine, again, who knows what's going to happen overnight, but I'm always looking for a way to buy right when the counter trend, in this case sellers, are thinking this thing is reversing, right? It wouldn't be difficult to see a lot of sellers looking at that as a double top. And a lot of rookies, when I was a rookie, I used to always try to fade those double tops in a bull market. But oftentimes what happens, they oftentimes go a little bit and they come right back in to stop you out again. And so I'm hoping we get that double top, that pullback, so I can then look for that retest of that high right on a scalp. So really at this point, I think the most important thing here is to get ready for these kind of 3 scenarios, right? 1 is we keep going higher, 2 is we go sideways the high, and 3 is we get that pullback. Now, going higher here. Let's talk about going higher, because as we go higher here, we're at all-time highs. There really isn't a lot that we could use here. I mean, I could I can project up a measured move on this, but that's not going to get us very much, that's not going to give us very much more information. So there really isn't a lot here to work with, right, as we go higher here besides the next big round number, which is quite a bit of ways, right, away from where we are right now. Here are two patterns as we go higher here. One of them is obviously that 1, 2, 3 breakout. Mark that high, mark that low. That gives me now my entry location. We talked about this earlier, right? What's the four things we need? Momentum, pattern, signal, and context, right? So if we get some bullish momentum going higher, we'll then look for a pattern, of course, right off the low of a channel. Okay, the signal, we'll talk about that tomorrow with all of our clients. We use a checklist in our trade room to check off all the rules to confirm the signal. And then what does context mean? Context means I want to make sure I get it off the low of the channel, not the high of the channel, right? When I say context, what I really mean is, where are we in the bigger picture, right? Are we right at the highs? Are we right at the lows? In this case, we're bullish. I want to buy the low of that channel. Those are the four things we'll look for as we go higher here. Momentum be bullish. I want to wait for a pattern coming off the low of that channel. Wait for the proper signal, which we'll talk about tomorrow in our trade room. And of course, context. Only buying off support. Only buying right around the lows of those channels. Now, there's one more pattern you can look for. This might be difficult if you're like me on the west coast of the U.S. because it might only happen overnight, which is that 2-try breakout. That strong move up, right? Big strong move up, and then one pullback, higher high, two pullback, trap. Okay, now this requires us to have a very strong break higher, right? It'll look like this, right? Let me talk back here, right? Very strong move higher. What will happen is the bears will come in. Well, in all honesty, this will be the buyers taking profit on the first pullback. The sellers will come in on the second pullback, and as soon as you get that trap low is always waiting right there for you to be a buyer. If we really get lucky, there'll be some sort of hidden channel, right, to incorporate with it. I'm always watching those hidden channels. Not required in that scenario, but that is something to keep your eyes on here tomorrow if we do make that run higher. Now, I'll be honest, unless there's another round of optimism out of Asia, right, I would expect this market to probably start to go sideways up here. So you definitely want to keep your eyes open for a range up here. How do you know it's a range? Double tops and double bottoms. Once you see that range, what I'll do is I'll use the size of that range to find my buy zones. And once I know where that buy zone is, now all I need is the right entry pattern. Okay, so again, momentum is bullish. Okay, the pattern will be the 1-try, the 2-try pattern. We'll wait for the proper signal, right, and context. I want to make sure I'm getting in underneath that trading range. Does that make sense? What are those four things again? Momentum, going with the market momentum. Pattern, 2-try pattern. Signal, we'll use the checklist together tomorrow. And context. It needs to be underneath that trading range, right? Not in the range. That's what I mean when I say context. We're not just looking for patterns, guys and gals, right? We're not just looking for patterns. If you're only looking for patterns, you'll make some money today, you'll lose it tomorrow, it'll drive you crazy. We want to take the right patterns in the right market context, in the right location. That's if the thing goes range bound. Now, what if we pull back? There are really two types of pullbacks that you want to be aware of. One would be a pullback to the low of this channel. The other would be a real steep pullback, which in all honesty, if you were to draw like a line off this and a line off that, right, that's how deep that pullback could be. Almost like a pendulum swing. You know what I mean? Draw off that one. If they come out and get clobbered here, it could be a very strong move down. Okay, now we talked about this on oil, didn't we? Right? We know that if we can get a pullback to the low of that channel, I can look for a very similar pattern to that one, right? I can wait for that moving average come over, see if I can get some of those counter trend sellers to think this is a double top reversal, Remember, if this thing double tops those highs, you'll have a lot of rookies out there, and I'm sure there'll be some experienced traders too that will try to fade this high. They'll try to sell off this high, right? And they'll probably get some money out of it on the way down. But once it pulls back to that moving average, though, we see those bears come in and try to sell off that moving average. Now we know right where their stops are. And we know there are even more stops waiting right above the high. That might as well be one big bullseye, right? That might as well be a bullseye right up at that high. Again, anytime I see a double top and I see sellers trying to sell off of it, almost every time it's going to eventually get right back up and stop everybody out again. Okay? And that might be the time when it runs with that 1, 2, 3 breakout. So, bottom line is, again, I'd like to get a pullback. If the pullback is relatively shallow down into my buy zone here, I'm looking for a failure. And then if we get lucky with it, we can go failure into pullback and up from there. This is a great combination setup. Always looking for that failure pattern into pullback pattern combination. Now here's some other food for thought. What if we really get slammed lower? If we really get slammed lower here, we may see something like this, where we end up getting a two-legged pullback, draw the trend line over, get up and over, and buy off that trend line. We call this a two-legged pullback. Got a lot of that. We cover a lot of that in the free course I mentioned earlier in this video. Okay, or if we just kind of slice lower here, what's the problem now if it really dumps? Right? Well, look back here. Look what happened back here. Right? It really dumps. Right? It dumps off the high. Guess what happens? Look at that. They try once. They try twice, and that's when it runs higher from there, right? See that? Because of that momentum. So we see a strong move down, real strong, real strong. That's okay. It's not a bear market yet. Okay, this market is just so bullish right now. You got to assume, though, that sellers will try once, sellers will try twice, and then once we get those bears trying once and trying twice, now we know where their stops are, and we can buy right into those stops. Now, these types of moves oftentimes get really aggressive as they run higher. We don't oftentimes see these really deep pullbacks. A lot of times, they're not going to pull back to that moving average and get you the entry there. So it's a failure pattern to a pullback pattern, right? That would be ideal. But a lot of times, though, when we get those really deep pullbacks and we have to use those nested patterns, a lot of times what happens is it just takes off and rips higher. And when it does that, you don't want to chase after it. Your best option is a trap. Those traps are gold, right? Or S&P, I guess you would, right? We'll cover gold here in a second. But you know what I mean, right? Those traps as you're going higher, and you'll notice it's kind of the same thing, right? It's the same basic idea. We make that run higher, let it pull back once, higher high, little trap low there for the buy as we go. So we're covering all the bases here for you here, right? So now we know if it goes higher, we know if it goes sideways, we know if it goes deep pullback or a shallow pullback, the best ways to trade it. What's a reversal look like? Reversal, pretty simple, right? Look back here. Big strong move down. If they would have held that pullback, this would be a bear market right now, right? The newspaper would say, worst day of the year, right? It actually finished in the red. The bottom line is, though, strong move down, pull back to the moving average, right? Strong move off the moving average. Look what we did. They didn't get it back there, right? Now, again, remember, though, right? If they fail here, we're going to end up going right back up into the top again. So wait for it to confirm. Mark up that trend line low. Find that new channel to find your hidden channel, and we're selling off that hidden channel. Now, it's tough to tell how far this market will go. You know what I mean? You got that gap down there, right? Where might we go here? The gap would be the easiest kind of giveaway as far as if we get that 1, 2, 3, mark that low, mark that high, right? And selling off that high. The gap would definitely be what I would assume is going to be your target. But I mean, come on, a market that's been bid up like this for the last couple of days, we could easily find ourselves by the end of the week right back to some big major lows there. Obviously, there would be a big shift in sentiment because right now it sounds like that trade one, that phase one trade deal is all but signed at this point. But who knows, right? I mean, we've heard we've heard this song and dance many times before from the U.S. President Trump, right? So we know there's potential for a trade deal. That's what seems to be bidding this thing up right now. But who knows if it'll actually get signed or if the sentiment will change. They got this stuff going on with Hong Kong, and just today, President Trump in the U.S. came out in support of the Hong Kong protests, and we know that's kind of a sticking point. I don't know, right? I'm a trader. I'll leave the news headlines to professionals. What I do know right now is sentiment can change fast, and when it does, we'll be ready for it. We know how to buy it. We know how to sell it, right? And we know not to buy high here right now until we see that proof. Let's keep going here. How about some NASDAQ? So the NASDAQ, like I said earlier, I think the NASDAQ could be in for a bit of a painful session tomorrow. It feels like a range is brewing on the horizon, just like here in Los Angeles. They get a bomb cyclone on the horizon here coming for tomorrow and Thursday. Should make for some good eating weather, right, on Thursday and Friday. I'm going to come back 10 pounds heavier with you guys in the month of December. The bottom line, though, is the biggest thing is we know we're bullish. We had that big run up. We're trying to get back to retest the high, but obviously didn't happen, and you can easily see we're right around the big round number. And I think the big giveaway here is, where are we? We're right smack in the middle of that range. That is not a very comfortable place to be right now on either side of this market. If you're a buyer or a seller, right? I don't think that this I don't think this is really a very easy. Let's put it this way. I don't have any reason to be a buyer right now. I'm very concerned, right, about this market hitting some sort of top right now, and it looks like it might be starting to go sideways here, right, inside that open here in Asia. So, the reality is I don't want to be a buyer here unless I can really see some strength. I'm going to have to see some proof on this. So we'll talk about how to be a buyer on this. I would imagine this will be some sort of range tomorrow, and then obviously, right, the pullback. So a lot of this will be similar to the S&P, but not exactly the same here. Now, how could we buy it as it's going higher here? Because obviously I can't trust it buying here. You can't buy here right now. What could I do? I could look for a trap pattern, right? A trap would really be the only option here. We'd have to see a strong run up, a 1 pullback, a 2 pullback, and a trap low before we get to that high. That's the hard part. Talk about threading a needle. We're going to have to literally thread that needle before we get up to that high here. The problem is you're going to have to see some strength going higher to give you confidence, but at that point you're too high up there. You can predict right now, but predicting's for that's for rookies. We don't want to do that. We want to wait for a more reliable pattern, right? And then we want to make sure we structure that trade as a trap. Okay, so for example, what are the 4 things we need? We need momentum. Obviously, we're bullish. We need a pattern, right? Basically a 2-try trap pattern. We need the signal, which again, we use a checklist to qualify the signal. And then we need context. Okay, this is where context is really, really important, because I know I've got that high overhead. That context tells me do not buy high. I've got to buy as low as I can. Okay, this is where context really comes in handy. It tells you that you've got to get a trap. You've got to get you got to buy as low as you can here, because you don't want to get caught buying high. So that's really the only pattern that I'd be willing to buy. Now, as we go higher, though, I could easily see a crown reversal. 1, 2, trap high, and back down. In fact, that would be a beauty if we could get that for tomorrow. Because then what will probably happen is this will turn into a big range, and that's one hell of a risk-reward ratio. Right? So that crown reversal will be a very attractive sell off that high. It's a bit aggressive, obviously, because you're selling in a bull market, right? But that's why you give it time. You let it go once, go twice. Trap high is most important, though. That's your safety. That's the trap in this example. It protects you against the buyers, because the buyers are going to buy the dips. The buyers are not going to buy, well, not the pro buyers, right? The rookie buyers might buy the breakout, right? But the professionals, the ones we have to worry about, they're buying the dips. They're not buying above that trap high. That allows me to kind of slip my order in and try to get that nice short off the high. Does that make sense? That's why that trap is so important if you're trying to go against the trend, because that's where the buyers won't be. It'll only be sellers up there. Well, again, only professional sellers, that is. Okay? Those are the two patterns as we go higher here. Now, we know the range plan, right? The range plan is pretty simple. It looks like that. Yeah, I would guess probably that's going to be your range. And so if I take that range, I'm going to copy and paste. We'll know more about this soon. But now that's going to give us now our buy zone. This is just a rough guesstimate from what I can see right now. Right? There's our buy zone now. And if you're wondering, these are NinjaTrader charts. I do highly recommend them to my clients. I have no horse in that race. I have no financial incentive to promote NinjaTrader. In fact, I think they could do a lot of things better. But the reality is it is, in my opinion, the best quality software platform. It's easy to use. It works on everything. I mean, I've been running Ninja 7 for a decade with zero problems. It's stable. It's really great. So plus, you can do all the brokers there too. It's really a great platform. You get what you pay for. It's not free, but you're going to get what you pay for. It's professional grade software. So now we have our range here. I know my buy zone now, and again, I'll confirm more of this as we see more information. Now what I want to do is I want to get underneath that range, get those breakout pullback sellers to try to sell off of it, right? Think about a breakout pullback. Think about how the market goes lower. Okay, the bears come in. What do? They try to sell off that moving average, right? It's a breakout pullback. The problem is the market's not bearish, and it's a range, and a range tells us most of the time what goes down will come right back up. That's a failure pattern right below that low. Maybe we don't get a range, right? Maybe it just tumbles. Again, I've got this I really had to kind of pull out the stops on this one. Let's get rid of that here just to clarify this. I drew a trend line off these highs, and you can easily see that's your channel, right? This is your channel right there. And it's such a weird channel. It's like my brain looks at it and goes, this doesn't make any sense. We don't typically see markets go down and then channel, right? Unless it's a flag. So it just looks really weird. But if you draw that channel at the highs, we talked about this last night, right? I'm always trying to find levels of support that do what? They allow me to risk small to earn large. So this channel for me is worthless. It's not worthless, but that channel, besides telling me direction, it's not really that useful. I'm not going to trade inside the channel. There's barely any room inside here. And I'll tell you right now, anytime you see a narrow channel, we talked about a wide channel earlier for oil. When you see, or a wide range on oil, right? Wide ranges have momentum issues, right? Narrow channels. What's the deal? What's the deal with the narrow channel? I sound like Jerry Seinfeld right now. What's the deal with these narrow channels? The problem with the narrow channel is there's no space. There's no space inside of that channel. And so what do we need? We got to get somewhere where I can risk small to earn large. And it's not inside that channel. These oftentimes produce big pullbacks. Okay, so stop beating around the bush, Joe. Enough of the jokes. In a narrow channel, look for deep pullbacks. Why? Because you got to free up space, right? In a wide range, momentum is the concern. Use the nested failures, right? That was oil. This is the NASDAQ. Narrow channel, got to get a deep pullback. Because once I get that deep pullback, now I can go structure the trade now, look for that failure into pullback combination, and now there's a lot of profit compared to the risk. Now, I'm not talking about stops and targets here. Okay? This is not meant to be taken literally. When I say get a good risk-reward ratio, I don't literally mean risk 10 with a 20-tick stop. Or sorry, risk 10 for a 20-tick target, right? That's not what I mean. What I mean is there should be the potential for buyers to make a 2-to-1 or a 3-to-1 on that. Doesn't mean we're going to get it. It just means there's potential. Because where there's potential, you're going to have interest. And when there's interest, you get reliability. Okay, that might be the most important clue in this chart right now. That narrow channel, right? Walking our way through this, talking our way through this. We do this together in our trade room. We see the charts, we analyze them, we talk our way through it. Again, like I mentioned earlier, we use a checklist to do all of this to make sure it's all done properly. But that's a really good setup here waiting for us for tomorrow. And obviously, last but not least, is the reversal. reversals are pretty easy. Hopefully we get it. I wouldn't mind a reversal here on these E-minis at all, right? Strong move down, pull back to the moving average, strong move off the moving average. Now you got it. Mark that low. I would personally go for the highs here, draw off that high, and see if I can't grab that hidden channel right off of that high. Every time I see a 1, 2, 3 reversal, 1, 2, 3 reversal, I always get excited because I know if I find that low and get up to the high, it's just a matter of time if we get that pullback to slap that thing lower. You'd be amazed how reliable that 1, 2, 3 reversal into hidden channel pullback is. Where's my target on this one? It's probably back to that gap fill. Again, as I mentioned earlier this week, we don't use gaps as a reason to trade, but we do use gaps as a reason to get out of a trade, right? Absolutely. So 8,300, gap down there. I'll believe that when I see it. It doesn't feel like tomorrow is going to be a gap-filled type of day. Maybe later on this week, when the markets tend to have a holiday, crazy things happen the following day. So we'll see. But as of right now, I want to be a buyer on this. I want to buy dips, right? Buy those dips. Let's wrap it up here right now on the gold. And boy, I'll tell you right now, I really appreciate you sticking around me tonight here right now. If you're still watching this video right now, that tells me you're part of the 1% club. The finishers, not just the starters. How many times do I get some email saying your videos are too long, and I'm thinking you're not a 1%er. Simple as that. If the videos are too long, well, maybe there's a different career that we could be looking for, because if you love this stuff, if you really love this stuff, these videos aren't long enough. I get a lot of those comments too, right? Show me more, show me more. If you're still watching right now, right, hit that thumbs up button for me. Let me know you're still here. Drop me a comment in the comment section. Tell me you're still here at 50 minutes into this video, right? I always want to reward you guys, right, and congratulate you and commend you for finishing what you started and being serious. So if you're still here right now, right, let me know you're still here in the comment section. Hit the thumbs up button for me. Let me know you're part of the 1% group of the serious traders out there that will be successful. You may not be successful right now, right, but they're going to have to really fight you back to make you, right, to keep you from being successful in the future. Let's talk about gold here right now. What do we got on gold? Gold is a bear market. To kind of sum this thing up right now, bear is a gold market going lower. It looks like a range. It definitely looks like it. The way it got kicked back there, that looks like a range. And that range got kicked back and is running higher here. Okay, those are the three most important factors. 1 is overall bearish. 2 is a range. And 3 is that big push, that big momentum push. Now, we've talked about most of this at one point or another tonight on this video. Let's break this down. What do we do with a bear market into a range? We sell, and we sell where? We sell high. We take the size of that range and we multiply, and we create our sell zones, our buy zones, right, below us. Then what do we do with those? We buy low and we sell high. Preferably, we sell high. How do we sell high? We sell with failure patterns. We go up into the sell zone, we wait for the buyers to buy the pullback, and we basically sell right into those stop losses right as we go. How do we buy off the low in a bear market? How do we buy off the low in a bear market, not a bull market? We let the price go below the range. What was that pattern again? It was the 1, it was the 2, and the trap. What was it called? A crown reversal. See, I knew you were part of the 1%. Good job, right? So you're paying attention. So we know the overall bears have it. I can be more aggressive selling above than buying below. Good stuff. Now, there's one curveball I'm going to throw at you here, and that is this strong momentum push. Now, we talked about how momentum impacts the oil, right? With that wide, juicy range we have on that oil. Okay, we have the same situation right now, but it's not so much the width of the range, it's the fact that it went below the range and then snapped back other direction. See, what happens a lot of times is most of the time, in all honesty, we'll go back into a range and we'll chill out in here a little bit, right? That absorbs that momentum. Then we can go up, go 1, go 2, and back down. Does that make sense? But when we just run right through it, if we run right through that range, this is now way too bullish just to sell it, right? Not to mention, it looks like this failure pattern is what? It's inside the range. That's not going to work either. Okay, that's not going to work either. So again, the big clue right now is that pendulum swinging back higher here. It's going to make it very difficult for me to be a seller in the traditional way I would sell the high of a range. It also feels like this thing might be heading for a short covering rally. But let's put a plan together. How do I sell it? Right? How do I sell it? Well, remember, one of my favorite things about ranges are these expanding triangles. Right? Got one right there. Got one right there. Okay, now, another option here, pendulum swing. The amount of the move below the range is the amount of the move above the range. Bingo. Now, look where we are. Those come together nicely right there. Okay, so it looks to me like we've got a little bit more room to go here before we'll start looking for the short. Right? Bunch of resistance levels waiting overhead. Little bit, right? Little bit, got a little bit further to go before we start looking for the short. Okay, now, how do we structure the trade? Okay, how do we structure that trade? What were the four things again? Momentum. Oh, that's the problem. Momentum's way too bullish. Pattern. What's the pattern going to be? Okay, if momentum is bullish, what's the pattern? The nested. You got it, right? Why? Because the buyers, they're not going to give up so easily. They're not going to give up so easily, right? They're going to try a couple times here. Okay, then my signal. Now, we'll talk more about this tomorrow morning, but signal, strong signal candle. And then context. What does context mean? It means I got to stay out of that range, right? Stay out of the range. Make sure I'm selling before we get back into that range. Momentum. What is momentum right now? It's way too bullish. So, okay, knowing that momentum, what's the pattern? A nested, a 1, a 2, and then back in. What's my signal? Strong red candle. What's the context tell me? Context says, don't fiddle with the middle, Joe. Stay out of the middle, right? Make sure you're selling above that range. You see how those four things really make it easier? Momentum, pattern, signal, context. Yeah, now we're talking. That's a great way to structure the trade for tomorrow. Now, what if I'm wrong, right? What if this thing just sinks right back down in? Okay, now what do I do? How do we buy off the low? Crown reversal, right? 1 try for the bears, 2 try for the bears. But why don't we use just a nested? We used a nested off the high. Why not a nested off the low? Because, hello, we're bearish. It's just not a bull market, right? I want to be a buyer in an overall bear market. What's momentum right now? Momentum is bearish, right? To be a buyer, I need a specific pattern. We'll wait for the proper signal. Context tells me what? Get in underneath the range. Risk small to earn large, right? But let's get serious, though. Let's get serious. Because I think right now, from what I'm seeing right now, I think there's a big bullseye going right back up. You got this big high right here. I would think, though, it's something like that. It's something up here. Right? Yeah, it's that. It's this 75 area, right? 74, 75 area. That smells like that's what they want to go for tomorrow. Usually when you see a market do this where it snaps below a range and then shoots back up, a lot of times these things will just keep grinding, right? And they'll keep going higher here. So let's talk about that for a moment. So again, before you go trading breakouts, where are you trying to go? You're trying to get up to that 74 point, we'll call it 75, okay? 2 patterns, right? 2 patterns. One of them is the aggressive one. Strong move up. 1 try for the bears, 2 try for the bears, go. Now in this situation, as long as we can clear above these trend lines here, I don't need a trap. Okay, I don't need a trap. Traps are only required when you're running out of space. Now, if this was to go way up and then go, yeah, you're going to want a trap, right? See the difference there? That's context. Okay, that's market context. Does that make sense? Right? If we really push, if we get, if that pattern goes all the way up, 1 and 2, okay, yes, now you need a trap, right? That's context. You know what I mean? We're too close to the high, right? The context of this market tells me you got to get a trap low on that. Okay? Those are 2 different scenarios right there. Now, the one I really hope we get is going to be that 1, 2, 3 reversal, 1, 2, 3 breakout. Mark that high, mark that low. This could quickly become kind of like a spike in channel, right? We're buying off the low of that channel. We're buying that pullback into that failure below the low of that channel, right? You know what I mean? We get that 1, 2, 3 reversal, it's on. It's just a matter of getting into the trade from there. The problem is you don't want to chase after it, because as soon as that rally stalls out, it'll oftentimes pull right back and give you a chance to get in from there. All right, guys? So I think we've covered a lot of the most important details here. Oh, how about a move down? Know where you are. Okay, now we talked about this earlier this week, right? You've got that low right there at 46.2, and there's really nothing else down here. You know, it's not all-time lows, but it feels like it here on gold. And so, you know, that's why I said earlier, I think if we can get down below these lows here, I would love a crown reversal off those lows, especially since they got smoked before, right? So I would definitely look for that crown reversal here, but be very careful trying to sell down here. I think the only thing I would do to be a seller is if we did go lower and we stayed going lower, right? If we went lower and stuck down there, then I could be a 1, a 2, right? And basically sell that 2-try failure pattern, right, above that high. You know what I mean? We have to really spend a lot of time pinned to those lows, right? Because that will create the range down there. The moving average would flatten out, and we could then sell above that high. But that will be later in the morning tomorrow, I would imagine, right? Mid-morning tomorrow. All right, guys? Boy, we've covered a ton in this video. If you haven't done so yet, make sure you grab that free course. If you think I dive deep here, I dive even deeper in my trading classes. So grab that free course in the upper right-hand corner. If you're on the blog right now, grab that big red button below the video to grab the free course. And as always, right, don't forget, come out and join me tomorrow. You know, tomorrow morning and every morning, Monday through Friday, 8 o'clock Eastern time, we go to battle together. Well, maybe not battle. It's not really much of a battle. It's actually kind of fun, actually, in a fun way, right? Kind of a fun battle, right? We cover all of our rules. We use our checklist. The big thing is we do it together. That way you don't have to go out there and do it on your own. Now, the easy thing to do if you're on YouTube right now is go right in the description of the YouTube video, because all the links are in there for you to get registered either as a member or as a part of our free course. If you're on the blog at sidewaysmarkets.com, there's a big blue button for you right below this video tonight. Or maybe membership isn't quite ready for you. Make sure you grab our free course on the homepage here at schooloftrade.com. Again, all the links are in the description of that YouTube video. So grab that free course, right? Part of the free trial. That'll give you a free pass to our trade room. You'll learn all about the 3-step strategy, our favorite entry setups. You'll love it. Grab the free trial on our website. And don't be afraid to call me tonight. I'll be more than happy to help you get registered over the phone. So don't be afraid to call that toll-free phone number. I'm always here standing by. And if you have any questions, you can always use that live support tool as well. All right. It's good to see all the 1%ers still here with me here tonight. It is great to have you with me here every evening. I will not be back tomorrow night on our newsletter tomorrow night. I'll be en route to Grandma's house. And of course, wishing you and your family a very, very happy Thanksgiving. Be safe out there, right? Be kind to people. Remember, people during Thanksgiving, they're stressed. Be nice to people out there, right? There's always somebody out there that can use a smile, right? A thank you, so try to pay it forward over this Thanksgiving. I have a lot to be thankful, right? My health, my business, my trading skills, and so do you, right? So spread that thankfulness around the world out there. Be nice to each other while you're waiting in line at the airport. I know we all want to get where we're trying to go, but have fun, be safe, be well, right? Don't eat too much. Make sure you come back and see me again on Monday, where we'll break open the month of December. The first couple of weeks of December are some of the best of the year. I can't wait to see you guys then, but I'm out of here for now. I'm taking up way too much of your valuable time. So get out of here. Get back to cooking. Get back to cooking, or maybe eating, right? We'll see you guys next time. Adios, amigos. Bye-bye for now.